One of the most feared technical indicators rearing its head. The 10-year yield officially entering into the dreaded death cross. That's when the 50-day moving average falls below the 200-day moving average. So are we about to see a fallout in rates? Beakers.
No. I don't think so. I mean, first of all, the death cross, I think at this point, yeah, I'm poo-pooing it and I'm beating it to death because it doesn't work. If it worked, none of us would be sitting here. We'd just be trading the death cross all day long. So number one, it doesn't work. Number two, the Fed has already told you they do not want a flat yield curve. So if you think about the way that they're going to structure their balance sheet over 2019, they want a steep yield curve. They already told you that. They want to do a thing called reverse operation twist, where they end up buying the short end of the curve and selling out the long end of the curve. Yield curve steepens, yields are going higher on the 10-year.
Well, except for that the Fed, I don't think, controls the long end of the curve.
They do with their balance sheet.
Well, except for the fact that if the market is taking the long rates down as much as that might imply, and I know you don't believe in the death cross, the Fed's not going to be able to be as aggressive on their balance sheet as they want to be. So, I mean,
it's a reverse, though. So they sell off the long end and they buy the short end. And then you have U.S. government issuing 10-year. You get a ton of supply on the 10-year.
That's if they're selling off their balance sheet. I mean, the way I look at it is they can't be as aggressive in terms of.
But they take whatever they sell off on the long end, they buy on the short end. It's like it's reverse operation twist. Rock. That's what it is.
It's remember the scene in Top Gun when Maverick explains how he was looking at the MiG, but he was inverted. That's what that whole thing.
That's what that was.
Inverted. Number one. You remember that was fantastic.
Great pickup. Too close for missiles. I'm switching to guns, guy. Fantastic.
At any rate, I would say this: in order for the yield curve not to invert, they're going to have to lower rates in the front end, and that ain't happening because the back end, I think, continues to go lower. So I think I'm in Tim's camp and think that the curve actually will invert and will happen soon.